Sekarang. Okay, now we will use this one slide to cover 4 chapters. Chapter 4 until chapter 7, which is about double entry up to trial balance. Okay, so meaning that you will have to refer to this one slide in order for you to answer ialah trial balance questions ke, double entry ke, journal ke, ledger ke. Okay. So let's us make a quick recap about what we have learned. Okay. What we have learned in chapter 2 and chapter 3 so far is, what is it? Accounting, classification, or the elements lah. I would say this is the accounts element. Okay. Hopefully you guys already review back my recorded lesson in JC so that you can answer my questions today lah. Okay, what is the first element in accounting? Can you tell me what is it? The first one. You can give me the answer in the chat box, or maybe you can just open up your mic and then answer it. What is the accounting element? The first accounting element. Okay, Ramia, can you tell me what is the first accounting element, Ramia?
Hi, Miss. Good morning.
Okay, morning.
Okay. Element means such as any example because I'm confused which element to actually tell.
Element, the 5 element that we learned last class.
Or asset, liabilities.
Yes, that assets, liability.
Liabilities.
Okay, and then
Expenses.
yes, correct. Expenses.
Income.
Yes, revenue. And last one.
And also model.
Model, yes, correct. But the other word of model, what is it? Honest.
Sorry?
Honest what? Honest?
Honest.
Is it honest equity?
Yes, correct. Yes, honest equity.
Thank you.
All right, thank you, Ramya and your garage. This is the elements, the 5 elements under accounting. This we have learned it last class. Okay, if I mention accounting classification or accounts element, so this is the things lah. This is the element, the 5 elements. You need to remember. I mentioned last class. If you don't know these 5 elements, it's hard for you to continue to prepare journals, T account, recognizing the effect and everything. So this 5 element is actually the I would say it's a basic thing and important thing in accounting. So this one I highlight here, important. So you need to know Okay, accounting element. So you know already what is the element, not I mean the details of the element, which under asset can be divided into 2, right? Then current asset and current asset. Liability also can be divided into 2, non-current liability and current liability. So all of the definitions I have already explained it last class. So if you want to review it, go back to my recorded lesson last class lah. Okay, and then we learn also about accounting equation. Accounting equation. Okay. Accounting equation can be divided into 3. The first one is, who remember what is the first accounting equation?
Is it basic accounting equation?
Yes, correct. Basic accounting equation, which only involving 3 elements. And the equation is actually from the element. Okay, so basic accounting equation only involving 3 elements, which is the asset equals to
Equity.
Yes, equity. Okay, betul. Liability plus with the equity. It's either equity in front or liability in front is the same je pun kan. So this is the basic accounting equation. Okay. And then we also learn about what is the second accounting equation.
Profit.
Yes, profit equation. Okay, profit equation start from profit lah. So how you want to calculate, how you want to get profit? It is by
Revenue minus its expenses.
yes, correct. So equation is like the formula on how you get profit. Macam tu lah, on how you get a total of asset. So like this lah, if you want to actually calculate how many profit the companies earn during that year, so you have to take a total of revenue for that company revenue minus with the company's expenses. So you will get the company total profit or net profit. So that is what equation means lah. And last equation is the
Extended.
extended
Accounting.
equation. Okay, this extended accounting equation is a combination of all of these elements. These 5 elements will include in extended accounting equation. So meaning everything will be in here lah. So the first, what is the acronym for extended accounting equation? The acronym, no acronym, acronym.
Adler.
Yes, Adler. So this is the acronym for accounting equation, which A stands for asset, plus D is drawing, E here is the expenses, okay, equals to L here is liability, plus E over here is honest equity. So I put it OE, okay, plus with last one the revenue. R here is the revenue. So this is basically what we have learned lah last class. And okay, wait, hold on. Okay, this is basically what we have learned last class. Okay, still in theory, a little bit of calculation when I give you an example on how to calculate asset, liability, and OE last time. Okay, but still in this is not like last class is not the tough topic yet. Today, we will take a look a little bit of confusing and tough topic. Okay, so now for chapter 4, it's about double entry. So this is it lah. Okay, we will use this slide to learn double entry rules. Okay, balancing of ledger accounts. Okay, ledger entries and trial balance. Financial statement is not here lah, not yet. So we will just only look at trial balance. Okay, so basically in this topic, you will able to describe and apply the double entry rules. Okay, record the business transaction into T account or ledger. It's actually the same thing. Hold on. Oh, yeah. Okay. So I cannot annotate anything in the okay, here can. Think so. In Okay. Okay. Okay, again, okay, record business transaction into into T account. So T account here means ledger. So if I mention ledger, so you have to know that one is I'm referring to T account. Okay, and then balance the ledger T account is the same thing. Okay, and then prepare a trial balance from a set of accounts. So basically, this learning outcome is according to the accounting process or accounting cycle process. It's the same thing. Okay, so in accounting process, of course, before you prepare accounts, you need to have a transaction, isn't it? Every account will start with a transaction. Transaction is like, let's say, a Jatin bought pencil from a stationery shop. So that is an example of one statement of a transaction lah. Okay, and then from one transactions, you need to identify the source of document. I mean, in every transaction, there will have a source of document. For example, just now, I give you an example about Jatin bought stationery or a pencil in a stationery shop, right? Of course, Jatin will actually receive a receipt as a source of document, right? So an accountant, they need to compile all of the source of document. We have a lot of example. I mean, we have a lot of types of source of document. We have receipts, we have debit note, we have credit notes, we have invoices, right? So accountants, once they once they encounter transaction, okay, once transaction happen, okay, they have to compile all of these source of document. And then from this source of document, let's say the receipts just now, they need to prepare a journals, okay, which is the third steps lah, or the second step. Prepare journals, okay, they need to journalizing it, prepare journals. Journals ni is actually a process of double entry, which you need to know about debit and credit. So double entry is all about debit and credit. So in journals, they have to identify which accounting elements, which accounts that need to be debit and which one that need to be credited. So actually, in our chapter today, we actually at the third steps, journalizing or journals. Okay, which mean you need to know about double entry, debit and credit first, then you'll be able to journalizing it lah. Means you'll be able to prepare one journals. Okay, so transaction here is actually classifying, where we learned it last class. We have once we encounter a transaction, you need to classify it, right? You need to classify whether this is our asset, liability, honest equity, or revenue or income. Revenue or expenses. So that is the first step, classifying, which the same thing as the source of document lah. Means you have to classify it according to the source of document. And then the second step is journalizing, which you need to know about the debit and credit. Once you classify it, you have to identify the effects. Okay, once you identify the effect, then you will know which one will be debited, which one will be credited. Okay, so double entry, okay, is actually related or following the duality concept. Okay, duality concept is actually a concept of double entry lah. Okay, let's take a look at what it's explained here. Every business transaction has an effect on the balance sheet components: asset, liability, honest equity. I mentioned just now. Okay, each transaction has a dual effect. Dual means double, or two effect. And this effect is recorded in the accounts in the accounting system. Okay, thus a change in any balance sheets or SOFP, okay, component is followed by another change which is equal but of opposite effect to another component. So here they just want to explain and tell you guys that every transaction, okay, just now that I give you an example of Jatin transaction, right? Okay, in that one transaction, actually it will affect two times in the accounting element, whether it will affect our asset and liability, whether it will affect our asset or and with the honest equity, whether it will affect in our liability and liability, both affect two times in the liability. So that is what it means lah. It means that every transaction must have two effects, two or more, 2 to 3 effects. Okay, later on we will see the example of how you identify the effect of the transaction. Okay, that one is about the concept. Okay, account. An account is a chronological record of the increases and decreases related to an item where the item is an asset, the liability and honest equity, and expenses or revenue. I mentioned just now, every transaction must have an effect. Effect here means whether the element will increasing or decreasing. Elements tu yang 5 thing tadi tu So whether the element will no, based on the transaction, whether it will increase the elements or decrease the elements. So that is what it means lah. Okay, an account is found in the ledger. Okay, ledger is this. This is an example of ledger. Okay, an account is also called a T account since it is shaped like a T. So this is T. When you do it like this, macam ni lah, T lah kan. And then up here is the account's name. And then left side here is debit side. Right side here is the credit side. I'm sure everyone know good that this is the nature of T accounts. Okay, left side is the debit. They call it as debit side. So whenever you encounter an effect that require you to include or to record it in debit side, so the item should be listed it here lah, on the left side, debit side lah. So whenever you encounter a transaction that actually have a credit effect, right? So you need to list it in credit side. Okay. So that is T account. Okay. Usually, the T account should have a date column, okay, particular columns. Okay, it means like this lah. Okay, this is the account name. Let's say I put it here bank account. Okay, the format of T account should start with date over here. Okay, and then particular is the name of the account over here. This is the name of the account. Okay, and then folio here is referring to any invoice number ke, so that you can refer to. See here, for cross-referring. So maybe invoice number or receipt number, anything that can be referred to. Okay, and then the amount of the transaction. Let's say just now Jatin bought a pencil at a cost of 10 ringgit. Let's say. So the amount should be here lah, 10 ringgit. Okay, so meaning here should put RM, then 10 ringgit. Let's see. Okay, so that is how the format of T accounts. And this one you know already that this one is left side, right? Ni dah salah ni. Ke tak tahu lah. Ni sebenarnya left side, not right side. Okay, left side here is debit, right side here is credit. Okay, now rules of double entry. Okay, these rules of double entry, I will not like go through all of these because I'm sure you will pening later on. Because if you remember, last class I give you like a formula for you to actually identify the effect. If I'm not mistaken. Okay, what is the formula? It is based on Adler equation. Okay, Adler is the extended equation, isn't it? Okay, which is we have asset plus with drawing plus with expenses equals to liability plus with OE, okay, plus with revenue. Okay, based on this equation, I form up a formula for you to be able to identify the effect of each of the transaction. Means it is also referring to the rules of double entries lah. Okay, so look here. Imagine that this is T account. So that's why I put it red line in the middle, because our T accounts kan look ada middle line kan, betul tak, between debit and credit. So imagine that this is the T account. Okay. Okay. So if you see, okay, this is the left side, right? So left side here, the nature of left side is debit. So let me put here debit. Because I asked you to imagine that this is our T account. So whatever that is in left side is debit side. Whatever is in right side here is the credit side. So here is credit. The nature of, it means that the nature of asset, drawing, and expenses account is debit side. Okay. And the nature of liability, honest equity, and revenue is credit side. Is on credit side. Okay. All right. Back to the rules of double entry. Okay. Asset, right? Asset is here. Okay. Asset increase by debiting and decrease by crediting the relevant asset T account. Okay. It means that whatever in debit side, when it's increasing, let's say in one transaction, you found that it will increase the asset. It will increase the drawing account. It will increase the expenses account. So whatever increasing in these three elements, on these three elements, we will debit it. DR is debit. Okay. If let's say our asset is reducing or decreasing, we will record it under credit side. So this is the effect. Ni effect wait. Up here is the elements. Okay. Okay. What about this one, liability, OE, and revenue? So if liability, let's say we take another loan. Okay, actually we take another loan. So loan is our liability, isn't it? So if we actually have a new loan, it means that we have a new debt. So we actually increasing our liability. Betul? So let's say the liability is increasing, or honest equity, our capital is increasing, our income is increasing, let's see. So we will credit the account. If you look here, it's actually contradicts. Okay, if asset, drawing, and expenses is increasing, you will need to debit it. Debit what? Debit the accounts lah. For cash, for example, cash account. So you need to debit cash account. So if just now we talk about loan, okay, we take in new loan, okay, meaning we have a new liability. Our liability is increasing, even though it's increasing, but the nature of liability is credit, right? So we need to credit it. Okay, when it's increasing, we need to credit it. But what about if it's decreasing? It means that we have already settled all of our liability. Okay, all of the loan, we have settled it. Means our liability is reducing or decreasing. So when it's decreasing, we need to debit the accounts. Debit. So this is actually a formula. Whenever you want to answer accounting effect. And I hear some noise just now. Do you have any questions? It's okay if you like still tak nampak, kita tengok nanti example of questions and then we refer back to the formula. So you just need to remember this is an important formula for you to memorize. Okay, meaning that whatever things, whatever questions that related to accounting effect or double entry, just refer to this formula. Okay. Okay, let's look at example of questions. Okay, this is an example of transaction that involve with assets. Okay, okay, look at this is an example of apa tu nama dia, transaction. Hopefully you ready tahu. Please focus because I want to start explaining in details. Okay. On 1st January 2012, Shamsuddin Enterprise bought a furniture with cash amounting to 200 ringgit. Okay, if you remember, I told you just now that every transaction, there will have two effects. So you need to actually identify what is the two effects. Okay. The first effect is, remember, Shamsuddin is the business. Okay, he bought a new furniture with cash. So we already know that we have two accounts here that effect. The first one is furniture. Betul tak? We bought new furniture. Furniture kan our asset. If you remember what is the example of asset last class, okay, you will able to identify it straightly. Furniture is asset. And another one is cash. Okay, we bought a furniture with a cash. These two things, furniture and cash, is actually the accounting that effect in this transaction. So don't look here first. Don't look at the double entry. Don't look at the journal first. I need you to identify the effect first. Okay. When a business bought a new furniture, okay, it means that, okay, look here. It means that this is the first example. It means that the furniture, which is our asset, isn't it? Furniture too. When we bought a new furniture, what happened to our asset? The effect, is it increasing or decreasing? When we bought a new furniture, the asset will increase or decrease?
Increase.
Yes, correct. So the effect here will increase. Whenever you try to identify, the first item should be the account's name. Furniture is the account's name. Here in the bracket is the elements. Elements is the accounting elements lah, yang 5 elements tu. Okay, and then this arrow here is the effect, whether it will increase the elements or decrease the element. Okay, like I mentioned just now, one transaction cannot have only one effect. Kena ada two effect at least. So the first effect is furniture, and then the second one is cash. Betul? Cash is the account's name. Usually the account's name is in the transaction. There will actually tell you in the transaction. You just need to find out what is the account name is. Okay. Cash is our what? Under 5 element. Cash lies in liability, asset, revenue, income, or honest equity. Cash is for what? Cash under what element? Tak review lah ni balik. Cepat.
Asset.
Revenue.
Yes, betul.
Revenue.
Betul-betul, asset. Cash is our asset, bukan revenue. Revenue is income. If we receive a commission receive or a rental receive, that one is our income. Okay, cash ni is our cash lah, cash in hand. That one is a company asset. So when we bought a furniture with a cash, okay, we actually take out some cash from our pocket lah, macam tu. So what happened to our asset? Is it increasing or decreasing?
Decrease.
Yes,
Decrease.
Yes, betul, decreasing. Okay, betul lah macam ni, decreasing. So this is the effect. This is the first thing you need to do when you encounter a transaction. You need to identify the effect dulu. Okay, baru kita masuk journal. Journal. Oops, journal lah. Journal. Okay. When you want to prepare a journal, you need to refer to this formula. Okay, don't look at the slide ya. Jangan tengok slide. Nanti you confuse. Okay, tengok my, okay, tengok my notes here je. Journal based on the effect, let's us buat journal. Jom kita prepare journal. Okay, here, both of the accounts, the effect is asset. Both of the element is related to asset. So we will just look at asset side lah, which is here. Okay, tengok asset, alamak macam nak habis, less than 1 minute. Okay. Asset here, the first effect, asset is increasing. So I mentioned just now, when asset is increased, we will debit it, betul? So when you want to prepare journal, tengoklah apa yang debit tadi, asset meningkat, debit. First thing is furniture. So furniture, buat dulu furniture. Debit kan, betul, debit. Furniture. Okay. And then, okay, ni dah settle lah. You dah put it in the journal. Debit furniture, because you know asset increase, debit. So don't put debit asset, debit the account name. Debit the account name. Don't you put debit asset pula. Debit asset dah salah dah. Asset is